All right, so the news is out. Last week, they made the announcement that September 18th, they are making a pivot and they are going to do a federal funds rate cut in September. Now, they did also mention that there was talks about this towards the end of July. So those of you who've been following me for a while, you know that when we monitor mortgage rates, we're looking at how the mortgage bond market is performing. Bonds are a type of investment that you can buy just like stocks. They're just a little bit safer. And so investors will buy mortgage bonds. And if that price of the mortgage bond is going up or down, it's really the indication of what's going to happen with interest rates. So let me show you back here in July, towards the end of the July, is when Jerome Powell said it is very likely that there is going to be a rate cut in September. When they made that announcement, we saw the price of these mortgage bonds go up, which is when we saw interest rates come down. Now, every news headline in America said that mortgage rates were down, the lowest that they've been since the last 12 months and all kinds of crazy things. Many of you might have, who own a home, got solicitations in the mail that now is the time to refinance. And I'm just here to tell you, it is not a one size fits all. There's no way that you can say 1 percentage point makes sense or not. It just doesn't work that way. You need to have a mortgage nerd like myself run a free analysis to calculate it for you. But when they made that announcement, September hadn't hit yet and we already saw movement in the rates. It works very similar to if we heard that Apple was releasing a newest greatest feature on their phone. A lot of investors might go out and buy the Apple stock because they know that this announcement's coming. Okay, mortgage bonds work the same way. So ever since that announcement, mortgage bond prices have stayed pretty steady. This is the most steady that they have been for an entire month. And here's where we are today, August 26th. And we know that last week they made this announcement. So what this tells us is that the interest rates are already impacted with the announcement that comes in September. So should you wait until September to buy a home or re-enter the market or get numbers run for you? The answer is no, because the rates are already impacted. And if you come to our website and you click on view rates, you're going to be able to get real-time every week updates about what the average rates are. Now, this is an average because interest rates look at all kinds of things like down payment, the state that you're buying in, the FICO, your debt to income ratio, all the things. But what I like to show you guys is down here is a payment chart. So it's going to show you if you're financing a loan, let's say you're financing this $550,000 and rates are at 6%, your payment's going to be $32.98 versus at 6.5%, it's going to be $34.76. And keep in mind, the price you pay on a home is permanent. The interest rate is temporary. So if we were to look at every 2019 buyer and we said, hey, are you glad that you bought in 2019 when interest rates were higher than what they were in 2020 and 2021? They're going to tell you yes all day long because they owned that home before rates came down, prices shot through the roof, so they got to capitalize on all that equity and profit, and they got to lower the rate when rates came down. The key is owning the home before it appreciates in value, so you get to keep the profit, not pay that price. But this is a good idea of if you're looking at, well, how much am I financing and what would the principal and interest portion of the payment be? It doesn't include taxes and insurance and PMI because it depends on what city and state you're buying in. This is a really good resource for you. So make sure you're following me on all things social. Instagram's probably the best, at The Mortgage Nerd. But this is your live interest rate update about what's going on in the market. Share, comment, like with whoever you want. If you have any questions for me, you know how to get a hold of me. Thanks, guys.